Check, please.
Welcome back to Everything Money. You're probably turning to YouTube to get some answers about the chaos that's going on out there, both with the war and the stock market. Our efforts over the past 3 years is trying to guide you to buy really great companies that can withstand potential market crashes like this. And in essence, if you're buying overpriced companies, when something dramatic happens, the excuse train starts coming out. We didn't think about this. Who knew that was going to happen? And in essence, we start talking ourselves into why things are falling. We all know the stock market swings on a pendulum from hype to negativity. And it seems like we're going in the wrong direction. But when this happens, excuses start coming out. And we're going to expose some of those in this video. Paul, give me your thoughts on what people are saying nowadays that things are falling.
So when the market goes down, people look at me and say, yeah, but we didn't know this was going to happen. I find it interesting when the market's skyrocketing, they have no understanding of why it goes up. They don't need a reason as to why it goes up.
They don't need a
They
reason.
just need a reason for why it goes down. Guys, I've been saying since the start of this channel, go watch my videos.
3 years ago.
3 years ago, I don't know what will cause markets to crash, but it'll be something that we don't see. The first one around, everybody said was COVID. But I find it ironic that COVID had 5,000 cases in the US when the market bottomed in March. And now we have 100 million, whatever the number of cases is. And the market's 2.5 times higher. Makes no sense to me. But guess what we saw? We sat there and said, it will be something. The analogy, I have two analogies. One is a room is filled with gasoline and there's a fireplace in the corner. This is a John Hussman analogy. We don't know which spark will make the room explode, but there will be a spark. Ukraine and Russia could have been that spark. But the room is filled with gasoline. Overvaluation is that gasoline. Example number 2, in relationships, it's rarely the one fight that gets a family a couple of divorce. What it is a build up of bad, and all of a sudden it's something stupid that causes the fight.
So this is the second time recently that major YouTubers have sold positions in
Oh, it's only starting.
In what we think are overvalued companies, Paul, and they basically they go back on their laurels about.
Yeah, they're hypocrites.
Yeah, they are hypocrites.
They're absolute hypocrites. Because if you really think Tesla's worth $4,000 a share, when it goes down, you should be buying more shares,
That's the thing.
not selling. Even if you think it's going to go lower.
You should be loading up right now.
I think Baba's going to go several $100s a share. I bought as it continues to go down. I keep buying.
Tesla's at 25-30% discount right now from the highs, right?
According to them.
Well, it is.
It is from the highs, yeah.
I should be buying
I hate the word discount because discount means it's like on a good sale versus value. It's 25 or 30% lower than the all-time high.
Lower than the highs. I mean, I'm buying more Alibaba right now. It's 40% from the highs. So
oh no.
40% from my purchase point.
It's like 70% from the highs.
From the highs.
Guys,
So
the difference is
Even
we
more so to my
understand
point.
value. We understand cash flow. We understand investing.
If you have felt alone in this journey investing in stocks in general, you can join the Everything Money community. Go to everythingmoney.com below or patreon.com for our foreign users. You can get in our chats and see what other people from all over the world are thinking, as well as getting all that data that's behind Paul. I watched the video. He said, I'm selling. He said, it's hard to make this video and to sort of admit that he's selling. And then he said, but who would have thought there would have been a war? And I was
that
like,
makes me, by the way, just hearing those words
That's what I thought.
makes my stomach churn because
I thought the same thing.
It doesn't matter what it is. Who would have thought anything would have happened? Who would have thought COVID? Who would have thought 9/11? Who would have thought anything? The point is, eventually people care. Eventually people care about value. And it's sudden, and all of a sudden prices shift. Why are stocks up a ton in the last week? Tell me that. Oh, so all of a sudden we need a reason why it falls, but we don't need a reason why it goes up. Guys, I'm sorry. It just doesn't make sense. It does not make sense. And if you don't think I get it, I don't get it. You're right. I do not understand it. I do know one thing, though, that over a long period of time, what matters fundamentally is price versus value. Price is what you pay, value is what you get. If you pay more than the value, you'll probably not do as well as if you pay less than the value.
Mm-hmm.
That's
just
it.
Yeah.
And you can love a company until you're blue in the face. Mo has a Tesla. Seth has a Tesla. I have a Tesla on order. We ain't touching Tesla stock unless it falls 90% from today. 90%. 90%.
Yep.
The only way I sell Baba is if some major news came out about Baba that made me go, I don't want this company anymore.
Is he a smart guy for taking profits at a high value?
And say that. Just say, you know what?
Just say I took profits.
I took profits. You know what? Even though I could still be wrong. Great. Do that.
I took profits off the table on Intel when it hit 60. It's not because I didn't believe in the company anymore. It's just because I looked at it saying, okay, I made a killing here. I'm just going to take my profits
very
off the
quickly.
table.
Mo made a killing very quickly. He made 30% of his money like that. Take some profits off. I don't do that.
Nothing changed in the company. I said, this is fast.
I don't do that. But that's the day trader Mo coming out. To me, I don't do that.
Mm-hmm.
I just look at it and say, oh, I like the company at this price still. Let me buy some more.
Mm-hmm.
Damn, he's got me even more confused now. I guess as a follower of his,
I wouldn't even try to figure it out.
And guess what? When it falls to 100, he'll say, see, I was right in doing that.
That's right.
And if it goes to 2,000, he'll say, see, I was right in keeping shares.
And holding my shares. He's right.
Great marketer.
Yeah.
Great marketer.
Yep.
Great marketer.
For me,
I was wrong on Amazon. Absolutely wrong on Amazon. 100% wrong on Microsoft, selling it at 58.5 or 58, whatever I sold it. 100% wrong. You know why? Because the value is above what I shorted at on Amazon and what I sold at on Microsoft. Not because the stock went higher, because the value is wrong. I was wrong on the value. Oops. I don't think Amazon's worth $2,500 or $3,000 a share. I think it's worth $1,000. High side, $1,200.
Yeah.
I think Google's worth $1,200, $1,000 per share. Now, maybe a little more now. Yeah, great. But I'm a buyer of Facebook now. When I wasn't a buyer of Facebook when it was $380, I'm a buyer of Facebook now. Okay. And if Facebook went to 100, I would buy more because it's consistent with what I'm saying. Unless some information comes out that specifically says why Facebook cannot hit the targets I suggested. Tesla, 1,000,000% will sell more cars this year than last year. They will sell more cars in the next 5 years than they did this year. If you bought it at 800 and you like it at 1,000, you should keep buying it. Because it's still growing, according to your thesis, it's still a growing company. And when you don't have a reason for buying, you won't have a reason for selling. You'll make up any excuse under the sun as to why you sold.
Where does this leave me with?
When did Russia invade Ukraine?
2 weeks ago?
3 weeks ago?
Okay, February 24th, right?
Yeah.
Great. Let's look at Tesla stock. Tesla stock, 3 months. February 24th, it's actually higher than it was February 24th.
Oh.
Right here. It's higher than it was February 24th.
Wow. You're right, Paul. That's how you make a YouTube video. You just keep saying stuff about
Guys,
how
there's two ways to go
awesome
here.
you
The
are.
why in the road is right here. You're going to know at some point here, 5 years from now, we're going to look back and this is going to be the why in the road. Which way do you want to be? Do you want to be a process-driven way that has an explanation that makes sense? Or do you want to go off emotion and hype, which never worked for anybody in any sort of facet in the world? Anything. Even when it comes to love, emotion doesn't work always the best. If you just follow your emotion, you're going to screw up. You still got to be somewhat rational and say, okay, when the emotion's away, what's going to matter? This is the why in the road. You have a decision to make. Unfortunately, the right decision is going to be the least taken.
Yes.
This is the emotional one. Everybody's going to go this way. And every good value investor in history says you've got to do what the opposite is doing.
You know, in the end, I don't think you should have a itchy fingers portfolio. I think you should have a very disciplined.
I didn't even think about that. Who the hell does Warren Buffett have an itchy fingers portfolio?
Itchy fingers. Maybe
Does Warren Buffett have that?
Maybe he's
Does
not.
Charlie Munger have that? Does Howard Marks have that? Does Seth Klarman have that?
These sound like idiots, Paul. Who are they?
Carl Icahn?
Mm-hmm.
Idiots.
Itchy fingers.
God, hypesters. But guess what? That's the world we live in. And guess what? That's what's going to make me more money. So I got to support it. I'm up this year, 3.5%. The NASDAQ's down 20%. S&P's down 13%. I'm up 3.5% with only a quarter of my money invested, including my short. So according to you guys should be like, Paul's a genius because that's the recent news.
Recency bias.
Recency bias, according to you guys. But now you guys are like, well, wait a second. It's all about long term. All of a sudden, Kathy Wood's about the long term now.
Oh boy.
Oh, that's awkward. That's so awkward. I'm done with this video.
That's our take. Final thumbs up. Argue with us in the comment section below.
You can't tell me 2 + 2 equals
Fish.
fish. It's not going to work. 2 + 2 does not equal fish any way, shape, or form. I'm sorry.
Well, in a young investor's life so far, it has.
Great.
2 + 2 has equaled fish.
And then they'll blame Wall Street in the future. You shouldn't blame Wall Street. Just blame yourself.
Yeah, I think when it's all said and done, we have all experienced a dramatic rise in pricing. And when things start coming back to normal, there's going to be a lot of finger pointing, excuses, and chaos. We'll be here to guide you through this. People in our chat can certainly help you. And yeah, keep listening. There's a language. It's going to get ugly out there, and we'll be here for you. That's our take. Final thumbs up. Subscribe. See you next video.